Have you ever wondered how a single retail investor shook the entire financial market? Let's turn the pages of history back to the tale of Keith Gill, a name that might not ring a bell, but perhaps you've heard of Roaring Kitty or Deep Fucking Value. That's him. Gill's story is not one of overnight success, but rather a journey of passion, knowledge, and an unyielding belief in his convictions. From an early age, he was drawn to the thrill and potential of the stock market. He saw it not as a gamble, but as a grand chessboard where strategy, patience, and insight could lead to victory. Over time, Gill's interest in trading evolved into a profession. He became an avid student of the market, analyzing trends and hunting for opportunities. Among the many stocks he observed, one caught his eye: GameStop. To most, it seemed like a dying business, but Gill saw potential. In an era where everyone has a platform, Gill took to social media to share his bullish views on GameStop. He started posting on Reddit and YouTube under his now famous aliases. His analysis was thorough, his conviction strong, and slowly but surely, people started to listen. His audience began to grow, and with it, the interest in GameStop. And thus, our protagonist was poised on the edge of an adventure that would shake Wall Street to its core. As the world watched, the stage was set for an unprecedented financial drama. The spotlight was on GameStop, a seemingly unassuming brick-and-mortar video game retailer, as it became the focal point of an event known as a short squeeze. This phenomenon is a rapid increase in the price of a stock, primarily due to technical factors in the market, rather than underlying business fundamentals. Enter Keith Gill, known as Roaring Kitty, a retail investor who was about to shake up Wall Street in ways it never saw coming. With a keen eye for value, Gill had been investing in GameStop since 2019, convinced that the company was undervalued. His regular posts on Reddit about his GameStop investments started to attract attention. As Gill's influence grew, he became an unlikely shepherd, leading a flock of retail investors towards GameStop. These individual investors, armed with trading apps and a desire to challenge the status quo, began buying up GameStop shares. This surge of interest led to a dramatic increase in GameStop's stock price. Suddenly, a company that had been written off by many was soaring to new heights. This was not just a story of a stock's rise, but the rise of the everyday investor. Gill's bullishness on GameStop had sparked a fire under a new generation of investors eager to take on Wall Street. It was a David versus Goliath story, with Gill and his band of retail investors up against the might of Wall Street's hedge funds. The underdogs were not only holding their own, but they were winning. As GameStop's stock price rocketed, the hedge funds betting against it were left reeling. In the thrilling world of stock markets, our lone hero was making waves like never before. Gill's story is a testament to the power of the individual investor. It shows us that with knowledge, conviction, and a little bit of courage, anyone can leave their mark on the financial markets. The underdog had challenged the giants, and Wall Street was feeling the tremors. Suddenly, Wall Street was turned on its head. The GameStop saga shook the very foundations of the financial market, as hedge funds that had bet against GameStop faced devastating losses. Gill's actions, powered by his unwavering belief in GameStop, had led to what we now famously know as the short squeeze. This wasn't merely a David versus Goliath story. This was a seismic shift in the financial landscape. The hedge funds, the supposed smart money, had been outsmarted, not by another institutional giant, but by a retail investor, a supposed dumb money, who saw value where others saw doom. The Wall Street giants had been humbled, and the world was watching. The impact of this saga didn't stop at the hedge funds. The ripples were felt across the broader financial market. The stock market, once perceived as a playground for the elite, was now a battlefield where retail investors could pack a punch. This event brought about a profound change in the perception of retail investors and their potential impact on the market. The GameStop saga was a wake-up call for Wall Street. It highlighted the vulnerability of an age-old system to the collective power of retail investors. The traditional dynamics of the stock market were questioned, and the potential for disruption was laid bare for all to see. This saga also raised important questions about market manipulation, transparency, and regulations. It showed us that the market isn't always right, that the smart money isn't always smart, and that sometimes the dumb money can have the last laugh. The giants had fallen, and the world had witnessed the power of the underdog. As the dust settled, the world was left wondering, what now for our rogue investor? The aftermath of the GameStop saga revealed that it was more than just a financial rollercoaster ride. It had far-reaching legal and regulatory implications, prompting industry watchdogs to sit up and take notice. MassMutual, the firm where Keith Gill, also known as Roaring Kitty, was employed, found itself in hot water. The firm faced a hefty fine of $4 million due to failure in adequately supervising its agents, including Gill. The company was accused of letting Gill carry out trades on behalf of 3 other individuals without their knowledge. This incident led to a complete overhaul of MassMutual's social media policies, reflecting the growing influence of social media platforms on the financial markets. Yet, despite the legal issues and scrutiny, Gill's star power didn't fade. He continued to be a prominent figure among retail investors, his audacious GameStop bet becoming a symbol of the power of the individual investor. His net worth, although not disclosed, is speculated to have grown significantly due to his GameStop investments. But Gill's influence extended beyond the trading floor. His story was so compelling that it caught the attention of Hollywood. The Netflix movie, Dumb Money, was created to explore the GameStop short squeeze phenomenon. Although the film received a lukewarm reception, it served to immortalize the epic tussle between retail investors and hedge funds, with Gill at the center of it all. Today, Gill continues to be active in the investor community, sharing his views and predictions on various stocks. His journey from an everyday retail investor to a Wall Street sensation has been nothing short of extraordinary. It has shown the world that with the right amount of determination and a dash of audacity, anyone can shake up the financial world. From the realm of social media to the corridors of Wall Street, Keith Gill had left an indelible mark. His story serves as a reminder of the power of the individual investor and the changing dynamics of the financial markets. It's a story that will continue to inspire and intrigue for years to come. In the end, it wasn't just about stocks or money, it was about challenging the status quo. Keith Gill, better known as Roaring Kitty, didn't just become a famous figure in the stock market world. He became a symbol of the power of retail investors, the underdogs of the financial market. His actions during the GameStop saga were more than just a clever investment strategy. They were a bold statement, a roar from the crowd that said, "We can play this game too." Gill's rise to prominence wasn't just about his personal gain. It was a demonstration of how a single retail investor could influence the dynamics of the stock market. His story served as a reminder that financial markets aren't just playgrounds for big-budget investors and hedge funds. They're also spaces where individual investors can make their mark, influence trends, and even challenge the giants of Wall Street. Today, the echoes of Gill's actions continue to resonate. The power of retail investors is now a widely recognized force, one that has forever changed the way we perceive the stock market. In the aftermath of the GameStop saga, Gill's life has been immortalized in the Netflix film Dumb Money. While the film may not have hit all the right notes, it serves as a testament to the seismic impact of Gill's actions and the enduring influence of the short squeeze phenomenon. So there you have it, the remarkable journey of a retail investor who shook Wall Street. If you like this video, please like and subscribe to this channel for more such exciting stories.